Stay on. We have Rajiv Bajaj, Vice Chairman and MD at Bajaj Capital, who's joining us on the show today on this conversation. Rajiv, thank you very much for speaking with us today. I want to start where, Avni kind of left off in terms of the fund flows falling for a fourth straight month. That's on one hand, and what your concerns are really on that. But on the other, on the flip side, despite the kind of volatility that we're seeing in the markets, we are still seeing some inflow into the mutual fund space. So is that something that would give you some bit of comfort?
Absolutely. I mean, the fact that we are now tracking mutual fund flows on a month-on-month basis, that itself is a, kind of an irony, because mutual funds are long-term investments, and that, should quarter-on-quarter, month-on-month flows really matter is a question mark, I'll put up. But coming down to the trends in last few months, the flows do indicate, what is the investor sentiment. And for 18 months in a row, since the Modi government got elected, we had positive flows and growing each month. It's only since November that the investor mood turned cautious. And November to February, we all know what has happened, that global, meltdown and, global volatility rather, kind of unsettled investors, and, they wanted to wait back, look back, sit back and watch, whether they should be putting in more money. They took a breather for a while, and that reflected in the flows of equity as well as balanced funds. March is interesting, so I just, got in data for the last 7-8 days. So while the flows are still down, but the investor queries have gone up tremendously, and investors have started coming back. So it's only 8 days since the budget, and people are still digesting the budget. They're still analyzing. I think pre-budget, there was a kind of a wait and watch, and what would happen. Could there be long-term, capital gains coming back on equity? There was, redemptions also. But post-budget, the scenario has changed. All of us as investors in our own capacity are re-looking at the landscape and taking fresh decisions.
Just to follow up to that, Rajiv, you're talking about March. I want to take a slightly longer term perspective. If there's more clarity that comes in as far as the global equity markets go, our own markets also start rallying, do you expect that MFs could be back in favor? Or do you think there's a bit of, sort of being weary as far as the equity markets go, which will be then go in the favor of the MF industry?
Yeah, I'd like to take you to a more 360-degree view of this landscape of investments. India has, two different, behavioral sets of investors. I would, categorize them as active investors and passive investors. Active investors are those who like to, sit in front of the screen and trade, buy their stocks directly. And they like to see the day-to-day action, and they watch your channel, for 2 hours a day. Whereas passive investors are guys who have been conventionally going through UTI and then the private sector mutual funds, and they are the ones who constitute this 12.5 lakh AUM. They are the ones who go for these tax-free bonds. So they kind of want to outsource the work to a professional fund manager. And the population is 50-50. It has been conventionally in the past. There is a significant trend shift. What investors are progressively realizing is that it's probably not worth it for them, to try and do it themselves, because more and more investors come out burnt from direct equity investing. And that's where there is a trend shift. And I would say, I wouldn't have a handle on what are the exact stats, but there is a definitive trend shift towards people using the professional fund manager route versus going into equity directly. So there is, in terms of long term, as you asked, I definitely see the mutual fund corpuses growing, tremendously in India. If you see the bank deposits to mutual fund assets ratio, it is still, 1:8 or something, whereas in developed markets it's 1:1. So over the next 5 to 7 years, I kind of see an explosion in mutual fund assets, and with the progressive realization of investors that it's not worthwhile for them to, kind of go directly into stock market. So that is the longer term trend. Now, what are the quarter on quarter? What is 2016 looking like? I see that budget has been a watershed. and people are still sinking in the transformative nature of this budget. It is a very deep, rooted budget in terms of what impact it could have on the economy. I see investors, getting more reassured by this budget, and the hope as far as the domestic economy and the corporate performance turnaround is concerned, that has gone up. Now, what happens on the global side, that's the blind spot that none of us knows. And, let us look back last 3 or 4 months. Whatever happened in the global markets, none of us could have really predicted, even in hindsight. So that is a blind spot, and that's where, the volatility is what the investors have to factor in when they design their investment strategy. So this is where the role of a, financial planner comes in, really.
Rajiv, Avni here. Thanks so much for joining in. We're really running out of time, but very quickly, how should an investor be approaching the investments right now in terms of equity versus debt? What is the outlook? I know it depends on goals and all of that, but essentially, should one be overweight equities at this point?
Yeah, so Avni, I'm very glad to be hearing you clearly. Last time I spoke to you, I had a really bad audio, so I was, but I'm happy to be in your studio and talking to you today. What should investors be doing today is that investors should really be looking at their investment strategy afresh. Budget is just 8 days old. We are at a very good time in terms of rebalancing your portfolio. I think you should fix an appointment with your financial planner, sit face to face, invest those 2 hours, and really have a deep look at your portfolio. I think the markets are poised very well. This is the time, as an investment house, Bajaj Capital has gone from neutral to overweight in equity. So that's a shift for us. And we have also shifted more from in debt to duration funds and also dynamic funds. So we have a more positive outlook towards debt. This is a time when every investor should be relooking at their portfolio. Do believe in the principles of asset allocation. Do continue to believe in that, because that is what will ultimately determine, take the emotions out of investing and will give you the long-term returns what you're targeting on your portfolio. And I would not want you to get too worried and try and, insulate your mind. Try and be a little meditative in your investment approach. Do not get too affected by day-to-day noise, volatility. There are 1,000 factors which affect the market on a day-to-day basis. We can't control them. So whatever you can't control, let's not bother about it.
Thanks for that great piece of advice, Rajiv. Apologies again for any audio issues you may have faced in the past. Completely out of time, though, on this conversation. Do stay tuned. There's more coming up on the other side.